first fireside chat. Mike is being joined by Representative Ro Khanna of California and Representative Ritchie Torres of New York.
Ritchie, nice to meet you. Real good to see you. So he literally went from, a libertarian Minnesota hunter, good guy, to two progressives. I told you before that this is, I said bipartisan, but Tom told me that it's not partisan, which I actually like better. And so Ritchie I've never met, but I've followed and watched and cheered for. He's from my part of the world, New York City. And Ro I've met, he's from the other coast, but has been a great friend of the crypto community. So guys, maybe start off, just introduce yourselves and talk a little bit about how you got excited about crypto and why you care.
Well, Mike, thank you. Thank you for all of your work. Great to be here with my colleague, Ritchie Torres. I didn't know Satoshi was black. I love the shirts. Look forward to your insights of figuring out who he is. Or she, there you go, or who she is. I have been supportive largely of the philosophical idea behind cryptocurrency and blockchain, which to me is about decentralization. It's about moving power away from large institutions and getting more people to participate in an economy. We have a huge challenge in Silicon Valley. I mean, as I don't have to tell folks here, less than 1% of venture capital goes to black and brown entrepreneurs. The numbers are even more staggering for black women. I think it's less than 0.3%. The $10 trillion of market cap in my district, Apple, Google, Intel, Yahoo, Cisco, LinkedIn, and yet most of that wealth generation has been excluding the black community and the Latino community. So at a broader level, I want to figure out how do we get more people participating in digital wealth generation. And blockchain is just one avenue of many that may provide more access to people participating in both the wealth generation and the governing of the digital economy.
Thank you. Ritchie?
So I'm Ritchie Torres from the Bronx, and I mostly approached it as a representative of the South Bronx. So I represent what's often said to be the poorest congressional district in America. About 20% of the people in the Bronx are unbanked, 30% are underbanked, overwhelmingly Latino and African American. And so I approach crypto out of a sense of disillusionment with the traditional financial system. I feel like the traditional financial system has fundamentally failed communities of color, have left people like us behind, and there is evidence that communities of color are searching for an alternative. That's why people of color tend to be underrepresented in the traditional financial system, but are overrepresented in crypto. Or, this is not related to crypto, but during the administration of PPP, 1/4 of black-owned businesses actually applied for a PPP loan, not from the traditional banks, but from fintech. And so increasingly, communities of color are gravitating toward alternatives like crypto and fintech. And so for me, the starting point was a disillusionment with the financial system. One thing that just infuriates the hell out of me is the predatory cost of remittances. So I represent a large population of immigrants who pay predatory fees to send their own money to their loved ones abroad, mostly in the Caribbean. And a few years ago, the New York City Department of Consumer Affairs did a study and found that low-income New Yorkers spend more than $200 million a year on check cashing fees. And in two neighborhoods in particular, in the South Bronx, which is mostly Latino, and in Southeast Queens, which is mostly African American, in those two neighborhoods, low-income New Yorkers spend $20 million a year on check cashing fees, right? And so I see that blockchain and crypto have the potential to create a better and cheaper and faster payment system that enables people of color to transfer their own money without the long delays and the high fees that accompany the traditional financial system. And that's what's motivating me. I think there's a real opportunity to decentralize both finance and the internet to the benefit of the most vulnerable communities in our society.
Well said. Well said. I think a lot of people see that promise. What has been frustrating, or it's just how these ecosystems develop, is so far crypto has been mostly about token economies, buying them and hoping the tokens go up. Tokens come in all shapes and sizes with different use cases, from digital gold to payment systems to NFTs. All of that needs to get built out for us to really live this dream of a decentralized system where you're really cutting out the middleman, where I think crypto can be so progressive. Part of what's stopped this is just time and technology, but also legislation. And so you guys are both working, on this issue. Talk a little bit about optimism, pessimism. Are we going to get something? And are we going to be certain to try to create a sandbox at least? Because if you're a small business, trying to keep up with the regulatory maze almost of from KYC and AML stuff to tax to fair offerings is brutal. And so how are you thinking about kind of taking this idea and making it accessible to people from challenged communities?
Well, we need smart regulation, and right now we don't have any certainty. So I've been working with Chris Broomer, who's a professor of law at Georgetown, who's written a lot about this, and a number of key principles. First, to understand some of the excesses of cryptocurrency should be regulated. So, for example, algorithmic stablecoins that aren't backed by the dollar and Terra. That to me makes very little sense. And we should have stable coins back to the dollar and have some regulatory framework there. Second, to say, look, the CFTC, I have a bill with which Tom and others are on, I think Ritchie's supportive, which says that the CFTC is largely the entity that should be regulating a lot of the commodities. Yes, in certain cases, if something is a security, it can be under the SEC. But by and large, a lot of these things are commodities and should be regulated with Scott Benham. And then if they are securities, they need to have rules of what should govern digital securities, because right now there are no rules there. So there's just a blanket presumption some of them may be securities without any rules about, well, then how would you even trade them as securities? So we have a bill saying, look, let's have the commodities regulated by the CFTC and pushing for those that should be regulated by the SEC for having clearer rules. And the final point is we want to eliminate, as both Ritchie and Mike have said, the middle person, because that's going to make remittances cheaper. But you don't want to eliminate all of the middle person. In other words, there's some value to know your customer, and there's a reason you have some friction in a system. So the trick is, how do you have the good parts of the friction without the bad parts of the friction? And that's where you need smart regulation. And most of us who are recognize the promise of the technology are not for laissez-faire, but we are for predictable, smart regulation, and we're working to get that in Congress.
Ritchie, you're on the excuse me, the Homeland Security Committee. I didn't even know there was a Homeland Security Committee.
It's pretty badass. But
Yeah, I'm guessing. You can't tell me about it, I'm sure. Stable coins. So there's one side of me that thinks, like, if there were as many Kim Jong-uns out there as people talk about, like, he'd be everywhere. Like, we're always, well, they could be sending money to Kim Jong-un or bad actors. We commissioned a guy named Mike Morrell, who had been at the CIA for 30 years, to do a paper who looked at Bitcoin and saw Bitcoin used less than 1.5% for illicit activity, less than cash and less than the financial system. And almost all of that was fraud. Is it really that big of a risk, this idea that crypto's being used for illicit purposes that would put our country at risk?
It is a serious concern. It's not to be taken light. So it is. The critics point out that the pseudonymous nature or the anonymous nature of crypto is exploited to commit cyber crimes, which is certainly true. But it's what's often unmentioned, and what is equally true, is that the transparency of blockchain can be exploited to solve crimes. Right? The key to solving financial crimes is to follow the money. And the easiest place to follow the money is blockchain. Right? Unlike paper money, crypto is traceable on the blockchain. Right? Law enforcement can monitor the flow of money from one wallet to the next. And as it did successfully when it retrieved a multi-million-dollar ransom that had been extorted from Colonial Pipeline. The ransomware attack on Colonial Pipeline was the largest cyber attack on energy infrastructure in the history of the United States. And the FBI exploited the transparency of blockchain to retrieve most of the ransom. So it's a double-edged sword, right? And my problem with the media narrative is that it will tell you about the cost of crypto but never mention the benefits. It will tell you about the destructive uses of crypto but never mention the creative uses. And I feel like the media narrative is one-sided and misguided.
Thank you. I'm going to hit you both on a quick stablecoin question because that seems to be a topic of the moment. What I worry about is like crypto is really nuanced, right? You can stablecoins algorithmic like the UST coin that was part of the Torres system wasn't anything close to what USDC is, which is backed dollar for dollar by treasury bills, which is different than Tether, which is kind of like a hedge fund or a non-bank bank. Broadly well run and broadly pretty conservative, but no transparency. So you don't know what you're getting. And so we have these different products all under the same name. I almost think we should name them something different. To me, it's a national security concern that we don't have a stable coin because China's going to have one. And when I travel to the Mideast or Africa or Latin America, I already see Alipay and WeChat, you know, the Chinese messaging app payment systems everywhere. And so if you're the Nigerian kid who's worried about 20% inflation, or the Turkish kid, or the Iranian kid, traditionally you put $100 bills in your pillowcase. Now you're going to put something digital. It might be Bitcoin, it might be a Chinese renminbi stable coin, or it could be a dollar stable coin, but we're making dollar stable coins pretty damn hard. And so how do we go from where we are to getting into the lead here?
Can I take that? Well, I would just, I mean, we do have stable coins. We have no central bank digital currency. But the question I would have about a CBDC is what function would a CBDC perform that cannot be performed
Well, I don't want a CBDC.
by a stable
clear.
coin? But, you know, the conventional wisdom and one of the criticisms is that crypto would undermine the US dollar. It would undermine the primacy of the US dollar. The experience of stablecoin demonstrates otherwise, right? Most stablecoin issuers have chosen to peg their stablecoins to the dollar, which to me is a vote of confidence in the US dollar as the world's reserve currency. And so when it comes to digital currencies, we're actually winning the great power competition. So far, we are outmaneuvering China, not because of regulation, but often despite the excesses of regulation. As you said, we're in the process of negotiating a stablecoin compromise on financial services. And if we do pass a law creating a regulatory framework for stablecoin, I believe after, you know, once you have regulatory clarity, it will enable stablecoin to scale up and to permeate into the broader economy. A few months ago, probably about a year ago, the president came out with a PWG report, which proposed regulating stablecoins issuers as banks. And I disagreed with the report. You know, I said to the Treasury Secretary, you know, a bank is fractional reserve, right? A bank will take $100 of your money and lend out 90 of those dollars, which creates real risk that requires intensive, rigorous regulation, right? Unlike a bank, a stablecoin issuer has no fractionalization. It has no lending function. And so if there's no fractional reserve banking and no lending, then it would seem to me that a stablecoin issuer operates differently from a bank and therefore should be regulated differently and requires its own regulatory framework. And I think we've won that debate. I think there's going to be a separate regulatory framework for stablecoin issuance.
Well done. Ro, what do you think?
The idea, and being recorded, so maybe it'll not age well, but I think it will. The idea that cryptocurrency is going to displace the dollar is just delusional. The United States dollar is 51% of reserve of currency in the world. It's about $100 trillion market. You're looking at less than about $1 trillion right now of cryptocurrency. And so I am very confident that the dollar, just like I'm very confident that America is going to be the preeminent economy of the 21st century. And so there's a reason 93% of American wealth is invested in the United States. And all the stablecoin, in my view, is doing is allowing the movement of dollars faster and without transaction costs and in ways that are helpful. I do think that the stablecoin should be backed by the dollar, and that's where you have, and those should be distinguished from people who are trying to algorithmically figure this out and haven't done a successful job at it. So I think we should have dollar-backed stablecoins that bring efficiency into the financial system, and then, but not be insecure that somehow this is going to displace the dollar.
So last question for two of you, and then after that I'm going to ask you to give these guys some advice. We got a lot of young people, a lot of students, so everyone's giving them their advice. But before that, privacy is a big reason a lot of people got into crypto in the first place. It was a lack of trust in institutions, it's a lack of trust in government, and while you might like this government, you might not like the next government. I was on a call with the central bank governor of Brazil who wanted to they're doing a stable coin and it's a CBDC. And originally it looked like it was going to be very privacy invasive because if you're the central bank governor and you get all the spending data, it makes driving your car easier, right? The dashboard for economic judgment is easier if you have a lifetime data on everyone's spending. And I quickly Googled gay and Bolsonaro, the president of Brazil, and I got 20 pages of how much their president disliked gay people. And I was like, dude, like, if you're gay in Brazil, you're not feeling really comfortable knowing your central bank has all your spending data. And he was like, and so I was trying to be provocative. Like, privacy is a big deal to a lot of people. It's certainly a big deal to communities that have been marginalized in the past and have had invasions of their privacy over and over. So how do we balance that with stablecoins, with crypto in general? That governments have a right to make sure we weed out malicious actors and kiddie porn and terrorist financing and all that stuff. On the flip side, they don't have a right to know what I'm thinking or where I'm shopping, or at least I don't think they do. And where do you draw that line?
I've proposed an Internet Bill of Rights, which at a basic level, when you go into Walgreens or CVS, you don't give up thousands of things about you, information about you. But when you go online, you basically are. People are learning everything about you. And I have said that before people's data can be taken from them, before it can be used, you need to affirmatively consent and have control over the use of that data. And that, to me, is the central challenge. Now, blockchain, as Ritchie says, it on the one hand, it makes things more transparent, so it makes things more public, but we want to make sure that what is being public is the minimal amount of personal data of individuals. We don't want everyone's personal information to be public, and balance what law enforcement needs with having a world where there is no zone of privacy.
Look, it's as with everything, it's a double-edged sword, right? Everything has pluses and minuses. So, yes, there's going to be more privacy for cyber criminals, but there's also going to be more privacy for those human rights activists in authoritarian regimes who need a private means of transacting independently of the government. And so I feel like we're going to strike a thoughtful balance over time, that as we develop regulation, as law enforcement becomes more familiar with navigating blockchain, I think we're going to strike a thoughtful balance. And the genius of blockchain is that it manages to provide transparency without sacrificing privacy, which is a genuine innovation.
All right, guys, last row. You've got a lot of students. You've got some people that are older than students. A few of them. I see a couple guys out there. Some advice, at least, to the students.
Well, I guess first I have a question, and that is, I know we have a biased group here, but I'm very curious. If you think of the student body at Howard, and you have two choices, do they view blockchain and cryptocurrency positively or negatively? Not just folks in this room. How many people would say students at Howard view blockchain positively? How many would say negatively? Or how many say probably no opinion? So I think that we're on the frontier of a new technology, and I guess what I would just say is I had one great honor in my time in Congress is I got to do a op-ed together with the late John Lewis, who's of course a great civil rights legend, and he and I had a line in there that we put, which is technology rights are the new civil rights. If you look at the wealth generation of the modern economy, 90% of the stock market gain over the last 5 years has been tech-driven. If you look at the wealth generation in my district, if you look at the number of digital jobs and opportunities that are going to happen in every field, whether it's manufacturing, retail, healthcare, technology is really going to matter in the economy and for wealth building. And we have not been inclusive in the technology economy. So my advice to folks would be make sure that you are pursuing an understanding of all of the opportunities in the tech space. Make sure you're demanding equal opportunity and working towards equal access, and blockchain can be one part of that solution.
Ritchie?
Look, I think my basic message is, like, we need all of you. We need your talent and ingenuity. The challenges facing our society cannot be solved by government alone, nor can it be solved by private industry alone. There needs to be a partnership between the two, right? And we should see crypto and blockchain not as opportunities to make money, but as tools for solving problems, especially problems that have been plaguing the most vulnerable communities of color, the problem of financial exclusion. But I feel like the burden will fall on you to hold the industry accountable, to ensure that the innovators in the crypto space are centering communities of color, and that we're creating an environment where we can all do well and do good at the same time.
Guys, I'm going to give one last twist to that because I think it's important. When I, started doing a podcast, one of my friends is in the music business, and he started bringing on young hip hop artists, A Boogie and Lil Yachty and all kinds of guys who I didn't know beforehand. Now I know most of the hip hop artists, which was a ton of fun. And it made me realize that the black community in America dominates culture. It isn't just player in culture, they dominate culture. I'm part of the Reform Alliance with Jay-Z and Meek Mill, and I see when you get to that level, the influence and power you have. But all across the board, I got a new friend named Too Rare. If you guys haven't looked Too Rare, look him up. He's awesome. But the Too Rare story is an interesting one, right? My friend discovered him. He really wasn't discovered. Too Rare already had a huge TikTok following. He went out there and gave Too Rare a big contract. Here's $600,000, and I get your next 5 albums. That's the deal that young artists get. And so the big company, if that artist really becomes successful, Lil Baby is blowing up right now. And let me tell you, the company that owns him is really happy. And little baby's like, man, did I sign that contract? Crypto has the capacity, right? What should happen in the future once we get, and we already have some of the regulations and crowdsourcing regulation. Too Rare should go on a platform and raise that $600,000 from his fan base, from the millions of people that already follow him on TikTok in small donations. They should get a token that actually gets them proceeds of that next 5 albums, and do it at probably 1/5, 1/3 the dilution, the cost to him. That's what crypto can do for us in time. It's not there yet. There's some platforms being worked on it. But when I think about things like that, or NFT, the NFT space, right? It's important that blacks are represented in the NFT space, that communities underserved are, because the NFT space is going to be big. And not just creating, but creating the NFTs themselves and developing followings, but being part of the infrastructure. It would be a damn shame if this new technology comes and the same people that dominate or that make the money off of culture, but don't create it, make the money off the crypto version. And so when you're thinking about places to look, culture's a really interesting one. So that's NFTs and platforms like that. Anyway, I want to thank these two. We are blessed today with a tremendous amount of talent from the Hill. And from a New Yorker, we don't get to see these guys that often, so thank you. Richard, nice to meet you.